Good morning to all of you and welcome to this year-end presentation for our financial year 21. I am Trond Williksen, the CEO of Benchmark, and as usual I have with me Septima Maguire, our CFO. We will give you insight into the financial and operational performance of our financial year 21, as well as some key initiatives taken to strengthen the progress of the group. And at the end of the presentation, of course, we will cover the outlooks also for the group moving into financial year 22. So, starting off with highlights, slide 2. First of all, we are happy to announce that we have left behind a year where we have managed to exceed expectations to created a strong momentum in the group. Following good progress in all our 3 business areas, the year ended with revenues of £125.1 million, which represents a year-on-year growth of 18% compared to financial year 20. If you measure it in constant exchange rate, that means that we grew our top line with 25%. In terms of adjusted EBITDA, we see an even stronger development, ending the year with adjusted EBITDA of £19.4 million, which is 34% above what we achieved in financial year. Also here, if you measure it in constant exchange rate, we have had a growth in our adjusted EBITDA of 43%. We are satisfied with the development that we have seen last year. The growth in both top line and adjusted EBITDA reflects what we have been communicating throughout the year. We've become a more commercially focused business. We have been gaining momentum throughout the year, and we have coupled the development with strong financial control. This is what we've been aiming at, and this is what you also should expect from us going forward. Now, keeping the momentum in developing Benchmark further is really essential for us. This is also why we have chosen to successfully complete a momentum fundraise of £20 million, which was also announced this morning. The fundraise was done at market and within the 5% mandate given to the board, and has been strongly supported by our main shareholders. We are happy with the support in the fundraise, and we are happy to have also brought in new shareholders. I would like to state very clearly that the purpose of the fundraise that we have been conducting has been to enable us to maintain the strong momentum that we have built in Benchmark in financial year 21, to continue to fund our growth initiatives, to continue to build the company that we have started building in the most forceful way possible. In the context of the company's positive outlook and growth opportunities, together with the approaching maturity of our 850 million NOK bond, the board has conducted a review of our capital structure and listing menu to support the company in the next phase of growth. As a result of this review, the board is considering a listing in Oslo as the world's largest seafood and aquaculture focused market. A listing in Oslo would give the company access to a unique financial aquaculture ecosystem with a leading global base of specialist sector investors and analysts. To help us out in the consideration we are undertaking, the company has appointed DNB Markets and Pareto Securities as our advisors. Finally, on the highlights, another good news is that we are strengthening the team and competencies of the group by appointing Atle Eide as a new non-executive director to the group. Atle is well known in the industry, comes with extensive experience from the international aquaculture and seafood industry, as well as from being an investor professional, and adds strong competencies to the board in the work being done to develop and position the group as a leading aquaculture biotechnology company. Moving on to the highlights of the performance in financial year 21. Next slide, please. As stated, we are satisfied with progress we have made during the year and the financial outcome achieved. The result stems from good progress in all 3 business areas, focused effort to drive the group forward from the whole organization. Having delivered a strong result, it's still fair to say that we are far away from any end station. We are still in the beginning of a road where the goal is to make this as a real profitable company. The steps that we have taken during last financial year have been important, and also they are also reflected in that we have been able to narrow the operating loss very significantly, an operating loss that we intend to get rid of as soon as possible. An important milestone for us during the year has been the commercial launch of Ectosan Vet and CleanTreat. This followed a rigorous regulatory process where we got the MRL marketing authorization in Norway. It has enabled us to move into a position where we can look forward to benefit from income streams and earnings also from our health business area, which consistently over years have been an area of investment for us. Also, the great progress we have seen in advanced nutrition has been during last financial year has been very important for us. The momentum built in this business area has been impressive throughout the year, and I have no doubt in my mind that we will see more of this if we continue to attend the business, to support it, and also to invest in that business area. Likewise, we have seen a continued growth in our salmon genetics business. This is currently the commercial backbone of the total genetics business we are building, and we are happy to see that we are gaining ground also in this area. Disciplined investment in future growth and growth area has really been a key for us in financial year 21. In total, we have invested 23 million during the year, all in areas we believe will pay well off for the company in the years to come. The investments we have done has helped us create a momentum in the business, a momentum we think is crucial to underpin in the time to come. Giving a little bit more granularity to the achievements in the three business areas during financial year 21, and starting off with genetics. Focus in this business area has been the commercial backbone of the business, which is salmon genetics, where we have seen continued growth in our salmon egg sales. Partly, this is due to a successful ramp-up of our salmon eggs facility in Salten, Norway, with 110 million eggs sold in financial year 21, an increase from 90 million in financial year 20. Fully tuned and configured, the facility has a capacity of 150 million eggs, and we will continue to develop this potential in the time to come. Within the salmon genetics area, we have also achieved the first local egg production and sales to customers in Chile. This is an important step to gain our desired position also in this market, as Chile remains the second biggest salmon egg market globally. And finally, we have taken important steps on Iceland, where we have initiated and partly completed an investment in a new biosecure incubation center, removing a capacity constraint that has caused limitations in our ability to deliver peak volumes with the desired quality to our customers. Beyond the salmon part of our genetics business, we have continued to drive progress in the two other core genetics areas. During last year, we have expanded the capacity of SPR shrimp breeders in our US facility to 100,000 breeders per year, and completed a multiplication center in Thailand. Both needed steps in preparation for commercial launch, and focus now has shifted towards commercial expansion in the markets. Helpful in this regard is that we now also have gained an import license for our shrimp genetics to India, which adds opportunity in another large market that is assumed to be important for us going forward. On tilapia, we have used the year to develop a strategy towards making it a sustainable, profitable business. A starting point for any commercial operation is to have something to sell, and therefore we this year have strengthened the tilapia offering by investing in increased production capacity in Florida. Focus also in this area is now to gain commercial traction in the markets for tilapia genetics that we definitely believe has its value proposition in the marketplace. Moving over to advanced nutrition, where focus has been centered around improving our commercial efforts. This was a needed reset for this organization, and from the numbers we can see that it has really paid off well. The actions taken includes strengthening the commercial team and focus under a new leadership. And new leadership includes both a new commercial director as well as a new head of the business area. We have also invested in tools, structure, and processes to make sure we get closer to our customers and enhance our value proposition in the different markets. In last year, we have also made needed investment in facilities in advanced nutrition, improving the safety and energy efficiency. This has been executed without disruption to service or supply, even if volumes that we have processed during the year has been peaking and close to record high at the same time as we have done the investments. Post-period, we are also enabled to get new solutions out of the development pipeline in advanced nutrition. In October, we launched Natura Pro and XL, a new feed protocol to substitute rotifers targeting the marine fish market. And finally, over to our health business area, where focus really has been to move from R&D activity to commercial activity through the launch of Ectosan Vet and CleanTreat. The commercial launch of Ectosan Vet and CleanTreat means that Benchmark now is delivering a solution to one of the biggest sustainability challenges of the salmon industry. It's fair to say that we are still in an early stage of the commercialization of the solution, and we are focusing our effort on getting customer uptake, making new customers integrate the solution as part of their sea lice treatment strategy. As expected, this takes both time and effort. The good news is that the interest for the solution is good, and the experience so far confirms the excellent efficacy of the medicine and the technical performance of the CleanTreat system. The use of the solution is as expected when a new solution is brought to the market. The farmers are using it in different operational circumstances, on different sites, and with different fish to get assurance. And we see that volumes of fish treated are increasing as the treatments are progressing. Even if we got the marketing authorization in Norway, we have previously announced that we will seek extension to the label, allowing for more efficient use of the solution. To be more precise, what we are seeking is to get reuse of treatment water on the label. This process has been ongoing since the issuance of the marketing authorization, and the regulatory submissions have been made to do the necessary trials. The trials will be done as part of the operational activities we have with customers, and we are of course doing what is possible to make the regulatory timeline as short as possible. Finally, a few words on further positive advances since the commercial launch. The first one is that CleanTreat has received the highest level of recognition for environment protection and sustainability by the Aquaculture Stewardship Council. This means that the ASC score is 0 when they use the medicine, and the highest possible score, an important contribution to make it even more advantageous for the farmers to use the solution from a sustainability and market perspective. And finally, I would like to mention that Ectosan patent now has been granted, giving 20 years of protection for the use of the medicine in aquaculture in Norway. This gives us the protection we need to develop the commercial success of the solution in the years to come. So that summarizes the headlines of what we have been achieving during last year. Now we are going more granular through the financials of the year. So I leave it up to you, Septima, to do that. Over to you.
Thank you, Trond. If we could move to slide number 8, please. Thank you. So as Trond has noted, and I take great pleasure in reiterating, FY21 has seen significant revenue growth in all business areas, resulting in 18% growth at a group level. Now, this growth gained momentum as we moved through the financial year, particularly in the second half. And with financial year 20 and the restructuring behind us, the theme for FY21 was focus. Focus on commercial activity to drive sales, focus on operation and logistics to meet those global challenges, and ensure we delivered the right customer experience. And of course, focus on investment to ensure that we'd more to offer than just organic growth. In the financial year, we've maintained our gross margin percentage at 52% year on year. And this also grew, of course, at an absolute level in line with sales. This accretion was mainly driven by nutrition and, of course, health through its first revenues from Ectosan Clean Treat, offset by margin reductions in genetics, as one of our growth initiatives, Chile, was in ramp-up phase for the Q4 first sales, and the margin on harvested fish within that area reduced. Whilst operating costs have grown at an absolute level, our operating profit margin grew as sales increased faster than the cost base. And this is also particularly pleasing as in financial year 20, we had significant cost-saving measures for COVID in place in the second half of the year. Adjusted EBITDA has grown by 34% to 19.4 million on the back of that improved trading and the initial launch of Ectosan and Clean Treat. Now, since I joined Benchmark, our stated objective has been to move the company into profitability and cash generation. And whilst we're still loss-making, the reduction in loss before tax from 22.6 million to the current 9.2 million is good progress on that objective. But there is still work to do there. From a cash generated from operations perspective, we'd good drop down from adjusted EBITDA in the year, with cash generated from operations at 22 million. This was absorbed by working capital buildup of 11.6 million and the CapEx, which we're going to look at in more detail in the later slide. Next slide, please. So, as you can see, with sales growth in each business area, we made good progress as a group. We made good progress in our core businesses. In genetics, the progress in our core salmon egg business is offset by costs associated with our growth initiatives and also reduced margins on harvested fish. Nutrition returned to growth at an adjusted EBITDA level, and health had the milestone of its first revenues from Ectosan Clean Treat. And this year was a year of investment, with investment in both our core businesses and also in those growth areas. Next slide, please. So focusing on genetics. Genetics grew revenue overall at 13%, with strong growth in our salmon egg business, where egg volumes grew 14% to 242 million eggs in the year. Within this, we also had first sales from our Chilean salmon egg facility. Looking at gross profit in this business area, our gross profit overall reduced by £0.7 million. This is with growth in our core salmon business and our tilapia business, offset by the additional costs associated with Chile as we ramped up that facility, and lower margins from the harvested fish as salmon prices decreased and production costs grew. The gap in the adjusted EBITDA level year on year is largely explained by the drop in gross profit, along with higher R&D and OPEX costs of 1.4 million, as we return to normalised levels of cost post the cost constraints in FY20. And we also had the increased share of losses in the associate from Q1 of this year of £0.8 million. Now, these factors reduced the adjusted EBITDA by 20% to 11.5 million. Next slide. But let's look at the breakdown of that adjusted EBITDA, the 11.5 million. In very many ways, it's a tale of two stories. The adjusted EBITDA associated with our core salmon business, which is mainly Iceland and Norway, and the associated ancillary revenue streams of £15.5 million. And then the growth areas which offset that core business. As you can see, our Chilean salmon egg venture has an adjusted EBITDA loss of £2.5 million in the year. Now, it's at an inflection point where we've just started commercial sales. In tilapia, this is running at a loss of £0.5 million, but made good progress this year. And we're making a modest investment to allow this growth initiative to produce fry all year round. And we aim in the next 2 years to bring this to break even and towards profitability. And that leaves our SPR shrimp programme, which has losses of £0.9 million. And in addition to that, 1.9 million of costs associated with the development programme are being capitalised. Given the launch of commercialisation of this programme is imminent, these costs will then flow into the income statement. Using the capacity that we've established in FY21, we anticipate a steady market entry into key markets within FY22 as we push this area towards break even and then profit contribution within the next 3 years. Within financial year 21, the aim was to support the business through ensuring that we supported the core salmon business through maintenance and growth capex, and got the growth area of Chile, tilapia and shrimp to a point where we can push them commercially towards profit contribution. Next slide. So looking at investments within this business area, in genetics, we've got 3 main production facilities in our salmon egg business. Salton, which is built back in 2015. We're still building capacity in this facility up to the planned 150 million eggs. We made good progress in financial year 21, producing and selling 110 million eggs. To reach the 150 million eggs, we'll have an increased investment in our biomass, part of our working capital. Then Iceland, a much older facility. It had reached the current capacity constraint in the incubation houses in financial year 20. And so a new incubation house was commissioned during financial year 21 to address this constraint. Now, as we grow, we're going to reach capacity constraints in other areas than the incubation centre, where we will need to invest to step up capacity to support this growth. And then the third facility is Chile, which is one of our growth initiatives. It's our newest salmon egg facility and has potential capacity for 50 million eggs and had its first sales in financial year 21. Then looking at shrimp. For shrimp, we have our facility in Fellsmere, where we've completed the required capex to produce 100,000 breeders, and our joint venture in Thailand. And of course, as noted earlier, our tilapia facility, where it's currently undergoing a modest investment of $400,000 to allow it to produce fry all year round. Next slide, please. So moving on to nutrition. Nutrition has made significant progress during the year with a return to growth, delivering revenue growth of 19%, despite continued challenges in some key shrimp markets. This was due to growth in all product areas, with Artemia growing at 22%, diets at 33%, and health at 18%. This sales growth drove growth in our gross profit, which we'll look at in the next slide. But then good cost control at OPEX and R&D level allowed a significant amount of this increase to drop down to adjusted EBITDA, with adjusted EBITDA growth from 6.4 million to 13.8 million in the year. In nutrition, we completed the planned work in our Thai nutrition facility, where we produce the majority of our diets. This facility runs with a really high level of utilisation, and as we continue to grow, we'll need to support expanding this capacity. In terms of other facilities in this business area, we have a facility in Salt Lake City in Utah, where we process and add technologies to our GSL Artemia products, and also have 2 trial sites to support our technical sales efforts, which are important levers for maintaining our place in the market as market leader in Artemia and hatchery. Next slide, please. So focusing on the gross profit in this area, it's a really important driver for both adjusted EBITDA and, of course, cash. Gross profit grew from 27.2 million to 36 million in the year. As you can see, the sales growth in each area drove profit growth and ultimately drove the gross margin from 46% to 51% in the year. You will also note The gross profit and margin were adversely impacted by foreign exchange rates, as the trading currency of the nutrition business is primarily US dollars. So at a constant exchange rate, the gross margin would have grown 7% versus the 5% at actual rate. Next slide. And health. So health had a marginal increase in the sale of Salmosan, our existing sea lice product, from 5.2 to 5.3 million pounds. At FY21 had the first revenues for Ectosan and Clean Treat of 2.5 million pounds, a milestone for this business area. Gross margin increased by 2.5 million pounds to 3.7 million with the launch of Ectosan Clean Treat, combined with increased margins for Salmosan. During the year, the focus of this business area was to obtain the marketing authorization for Ectosan Vet and launch the product along with the Clean Treat environmental system. These activities drove an increase in operation costs and R&D from 5 million in 2020 to 6.4 million in 2021. And all of these factors resulted in the adjusted EBITDA loss shrinking from 3.7 million in 2020 to 2.7 million in 2021. In health, all of our investment surrounds the Ectosan development programme and the commissioning and mobilisation of the Clean Treat units onto the two vessels, and of course the investment we'll need for future vessels. Next slide. So when we look at the cash flow, as noted, we had cash generated from operations of 22 million. That's mainly coming from the nutrition and genetics business areas, with offsets in health as it's still loss-making in the year and also corporate. The working capital outflow this year relates to three main areas: the return of nutrition to sales growth, the increased biological assets in genetics, and the launch of the vessels for Ectosan and Clean Treat. As we continue to grow organically and launch new vessels, working capital investment will be required to support this growth. From a cash investment perspective, we've invested £22.6 million in the business in total. And we're going to look at that in our next slide. Of course, we also have the impact of leases on our net debt figure, with 24 million of this figure related to leases at the year end. So excluding this, we have net debt of £56.9 million versus £27.1 million at the 30th of September 2020. At the year end, we had a cash position of £39.5 million with good covenant headroom, which will be strengthened by the placing announcement today of 20 million to support and accelerate momentum in the business. As at 25th of November, before the placing, we had £40.2 million of cash and available liquidity of £51.4 million. Next slide. So looking forward, so when we look at our business, financial year 21 was a good year, but I know you're only as good as your next year. So let's recap as to where we see our business progressing in the medium term. In genetics, our core salmon egg business in Iceland and Norway is expected to grow ahead of the market. Chile has commenced commercial sales. We're going to ramp up the progress over the coming year as we move it towards its maximum capacity over the next 3 years of 50 million eggs, towards break-even and then cash generation. For shrimp, moving towards launch with current capacity of 100,000 breeders, and then the ability to bolt on capacity in a modular fashion as demand dictates. And tilapia, finish the investment and move towards break-even. In nutrition, continued growth in this area with opportunities in each of our product areas, with continued growth and momentum still to be achieved. And then health. We will, of course, continue our ramp up of Clean Treat with an aim to also move towards the originally anticipated margins of 60% through additional variations to the label. And then looking at our capital structure. There's, of course, the ongoing liquidity and headroom to be maintained. And of course, we need to address the NOK bond, which matures in FY23. And it was that in mind that drove the board in 21 to undertake a review of the capital structure. And as a consequence, we're considering the possibility of an Oslo listing. The points to note are that we feel that Oslo is a unique investor profile, which specifically focuses on aquaculture. And with that in mind, we could raise the profile of Benchmark in that market, and that we could potentially find a place within that aquaculture ecosystem, which would positively benefit us as an organisation. With that, I'll hand you back to Trond.
Thank you, Septima. And as stated initially, where we are right now, what is very important for us is to make sure that we keep the momentum that we have built over the last year, ensuring that we can do the right decisions at the right time, having sufficient headroom to fund our growth initiatives, and to forcefully develop the company to its potential as quick as possible. In this development, we will stick to the guiding principles we have established for the group, and we will stay true to the core. We will apply financial discipline. We will focus on execution, and we will seek profitable growth. We will also follow the roadmap we have developed for the journey of the company, meaning that we will maintain and grow the group's leading market position. We will also seek organic growth to new products and markets. And our strategic priority number 1 is to continue the rollout of Ectosan Vet and CleanTreat, first in Norway, then in new markets. At the same time, it's important for us to develop other growth vectors, like SBR Shrimp, where we have seen the potential, where we've done the groundwork and ground investments, and we need to continue to support the development into a commercial phase. In parallel with developing the commercial performance of the group, we will keep on focus on developing the group's internal capabilities as one benchmark. And finally, as a last step on the roadmap, is to seek new opportunities, positioning benchmark for the future. So far, the focus has been on what we have had in our hands. So soon, the need to add to this becomes more essential, and we will seek future opportunities within the 3 core business areas, including through R&D, partnerships, and add-on acquisitions. Moving to the next slide. The key distinguisher of Benchmark compared to other aquaculture biotechnology companies is the combination we have with our 3 core business areas: genetics, advanced nutrition, and health. This creates an opportunity to approach the customers with value propositions that are more holistic than what has been possible for companies only specializing in one of these areas. Focus till recently have been to make sure we got good traction in each of the business areas, but we have not lost sight of the opportunity that lies in combining value propositions between the areas. Structures and processes are now installed in the organization in order to start to address the cross-area opportunities. Our efforts to bring together Benchmark as one is also starting to pay off, and the communication on joint business opportunities across the group is moving. This will be an area we will focus more on, knowing that we are moving into a new phase of development of the company, targeting to take out the real value potential of Benchmark. Moving over to outlooks. We have good momentum in the business moving into financial year 22. We expect consistency in performance to continue in genetics and advanced nutrition. We have seen good developments in both these business areas, and we expect to keep this momentum. We are also looking forward to a year where our health business area starts to benefit from Ectosan Vet and CleanTreat. As we are moving through financial year 22, we expect to go from having 2 business areas generating cash from operations to having 3 business areas that all are contributing to the group's financial performance. Part of what has been changed from the onset of financial year 21 to now is the market outlooks for end markets. Yes, COVID is still here, and we expect it to be also in the coming year. But and it will have effects on the cost side, but the seafood end markets are looking strong. Salmon markets are solid with positive outlooks for the year to come. At the same time, global shrimp markets have shown strong recovery, which is expected to last into the coming year, Also the zebra market, which is important for our advanced nutrition business, are also recovered and stable. So all in all, the market sentiment should therefore be better in the year that we are moving into compared to the financial year we have left behind. And we expect to trade in line with expectations for the year. Finally, just next slide, please. Just on a final note, just to remind everybody, Benchmark is a unique company. We are purpose-driven. We are in a growth industry supported by megatrends. We have leading market positions within our core areas. We have a clear strategy to deliver profitability and growth. And we have a complementary multi-species solution offering supported by unique technology and expertise. So with these concluding words, we are open for Q&A.
Thank you, Trond and Septima, for that helpful canter through. And we do have our first question. Are there plans to introduce other species to the genetics business?
The answer to that is that, salmon genetics is the core of the commercial part of what we're doing in genetics. We have 2 other nucleuses that are well developed and that we are in the midst of commercializing right now or getting into the market, which is shrimp and tilapia. Beyond that, we have genetic services, providing genetic services, running breeding programs for more than 10 other species globally. It functions like, it's a business area for us within the genetics area, but it also functions as a bridgehead for us because the other species that we're talking about, they are less developed. And as they are developing, we are creating positions and optionality for ourselves to enter into new species down the line. The focus right now is on salmon genetics, shrimp genetics, and tilapia, but we are positioned also to go further than that as the aquaculture industry globally are expanding and developing.
Okay, thank you. Moving over to Clean Treat. What do you see as the hurdles to a more rapid uptake?
The main hurdle, the way I see it, and I have a background from this industry myself as a salmon farmer, is to actually get the solution into the treatment strategies that are already established for the farmers. No doubt in my mind, and I don't think no doubt in any other's mind in this industry, that the toolbox for sea lice treatment needs to be filled, and this is a solution that is both sustainable but is also efficacious to the sea lice as a sea lice treatment. But the farmers, they already are treating sea lice. They are heavily invested with mechanical treatments. Lumpfish, freshwater treatments, and they already have established a strategy to deal with this, right where they are right now. They would like to improve that because it's a need to improve that, But for us, it's a matter of getting our solution into that strategy to make it fit into the established strategies that they already have. That takes time and effort, and that's what we are seeing now. That's what I expected also it will do. But as long as the solution is efficacious, and it is, as long as the Clean Treat system technically is operating as it should, and it is, and as long as the interest of the solution is as it is now, very positive, it's a matter of using time to get it into that treatment strategy of each farmer.
Okay, and as for the second vessel, is that now online and being used?
It's online and it's operational actually right as we speak.
Excellent. Regards growth in the net result, can you comment on the underlying trend, stripping out the impact of COVID on both sales and costs?
Sales, I would say, if I start with the easiest, health and genetics, the core health is really focused towards the salmon industry, and the commercial part of of genetics, or the most developed commercial part of genetics, also related into salmon. Salmon industry has, of course, like any other industry, been impacted by COVID, but to a less extent, So I don't think, sales into those industry has been affected by effects of COVID on the salmon industry, to be honest. When it comes to our advanced nutrition business area, it's a little bit different. No doubt that COVID had a huge impact on the demand of shrimp at the beginning of the pandemic, and that caused a retraction of the demand, impacting also our advanced nutrition business, especially in 2020. Little less, I would say, in 2021, since the shrimp industry recovered and using of shrimp also grew. So a little bit on the market side, I think we've been impacted in advanced nutrition due to COVID effects on the markets, shrimp markets. Main effects, I would say, has been over the last half year, and I think it's an effect that everybody sees, is that challenging logistics. And we expect that to stay. Just to get a container shipped from one place to another place is not easy these days, and the costs related to transport are increasing. Luckily, we are forwarding those costs mostly to our customers, but that's the trickiness of logistics has increased, and we expect that will keep also going forward. But we have become very good at it, to be honest. We've become very good at it, and we have managed to have the growth and the momentum build in advanced nutrition, even if we have had those logistics challenges. Another effect that we've seen lately, and that we will see more of going forward, is the increasing cost of everything that goes into a supply chain. We've seen that especially in advanced nutrition, but I think we see it all over the business, and it's a matter for us to adjust also the pricing of our products in order to reflect that. But that's an effect that I think we see. That's an effect that everybody sees. So it's a matter of staying awake to make sure that you are doing the best out of the situation. Yeah,
in terms of when you look at it from a year-on-year perspective, I think the bigger impact is actually the backdrop of FY20. If you look at FY20 from a cost perspective, we had significant cost-saving measures. Senior management took pay cuts. We didn't have any, no bonuses were going to be paid. We had a lot of pauses on discretionary spending. Whereas FY21 was a year of trading. It was very much a year of focusing on the business and actually pushing the business forward. FY20 was very much pause and ascertain what the longevity of the crisis was going to be. But as we entered FY21, we wanted to ensure that we were allowing the freedom of our business to trade. And we can see the results of doing so, and we can see the progress that we've made in the year. But you can also see that our cost base increased on the backdrop of a significantly restricted cost base in financial year 20. So there's an element of last year versus this year, but also the progress of this year as well.
Thank you for that. Obviously, you put in the announcement the potential move to an Oslo listing. Do you see this being a joint listing or a move away from London?
Septima, you can probably answer precisely where we are. We are considering a listing in Oslo. That's where we are. Just to have stated that as a base, and then Septima, you can expand.
So the point at which we are as a board, but we are looking at Oslo as a potential listing venue. We are looking to see, can it strengthen the overall shareholder value of the business, and provide us with additional access to the investor base there, but also the aquaculture capital that generally is focused towards Oslo. We have not been at that point where we're considering, we as a board have have made any decisions on anything. The reason we disclose this now is because we want to be transparent. We want to bring our shareholders with us, and to do that, we want them to see that we will disclose the items that are of note to them as shareholders. So we want to make sure that whatever we do is in the best interest of benchmark the business and ultimately create shareholder value for the shareholders.
Thank you for that. When will back to Clean Treat? When will Clean Treat technology be made available to other key salmon farming markets outside of Norway?
The easy answer on that in due time, because we are focusing very strongly on Norway now, and we have been very, very clear on and communicating that all the way, and you have to remember Norway is more than 50% of global salmon production. It's the frontier of the salmon industry. And we really would like to take on the opportunity in that market first, make sure that we prove ourselves in that market. And then, of course, we are looking at other markets along the way, and we are starting preparations on that. But we are in this business, the way we are running Benchmark, we are very disciplined in focusing on and doing the right things in the right order. So we think it has been very important for us now to focus our efforts, focus our people on the largest market to get the right traction there, and then then we also get experiences from that market that will be very useful when we are moving into other markets. And there are also regulatory pathways that we need to follow in order to get into other markets. But of course, we have started to plan for that, but focusing is on Norway for now.
Lovely. Well, thank you both for your time. That is it from the questions. So good luck with the next 3 months, and we shall look forward to an update after that.
Thank you, Hannah.
Thank you, Hannah.